Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, May 16th, 2016. Well, folks, let's get into some action here. I want to talk a little bit about the SPY. A great rally here. Now, granted, the volume is non-existent. I mean, 44.9 million right now, and we are literally nearing the 2:30 time frame. So you just got an hour and a half left in the trading day. We're probably on pace to do right around the lightest volume of the year, which has been around 55 to 60 million on the SPY. So right away, there's not much buying going on here, but really what is going on here is, if you look at it between buyers and sellers, yeah, there's obviously more buying, even if it's not heavy buying in the market. And it's really the lack of sellers, I would say, that's keeping this market floating higher. And that's why you get a light volume day like today. Now, what you're seeing here is the spiders actually hitting this little level of resistance. Notice this little pivot top going back to last Thursday. So you do have some resistance right here. I only shorted the stock market today, the SPY, once today, and it was right off of the 200. We got a nice pullback. I took a 30-cent gain right there. So it was actually a nice little trade, but there really, because of the light volume, was not another opportunity to get on the short side today. And that's okay. You have to recognize your opportunities and what is good and what is bad and know when to stay away, essentially. Now, the one thing I'd like to point out to you is this market has been unbelievably whipsawy, meaning it just goes up and down and up and down. You can see this here. I mean, look at, if I zoom out on the chart, look at these down-up moves. I mean, it's incredible. I mean, really, just over here, we went up, then we came down, and now we're going back up. And this whipsaw is likely to continue. It seems like you have sellers emerging every once in a while, every few days. It knocks the market down. And then you have buyers, really just a few buyers on light volume and a lack of sellers. Then the market floats back up. And I look at this market as a distribution market. And let me explain why. Distribution, first of all, what is that? Distribution is where usually big money sells and small money buys. Meaning that's why you get the light volume up days. Because on these down days here, you're seeing heavier volume. For instance, Friday, volume was pretty decent, close to 100 million on the spiders. All right, over here, same thing on this down day, 75 to 100 million. Then you get the float day like today where the institutions step away and they do not sell. They know in this market environment, if they step away and don't sell, the little guy, the small investor, will buy the market and it will float higher. So essentially what they're able to do is get the same price and continue to sell into it. So and this is what's going on here. So you see all this choppy range here? This is institutional selling here. Then they step away and the market floats back up. Then they can sell again right here and they get a real good price. Now, if they sold all at once, the market would crash, right? It would just keep going down. But because they're stepping away for a day or two, it's enabling the small buyer to keep the market floating up and them to then sell at a good price again within a couple days. So that's distribution, and this choppy market like this is very much telling us that, and you guys need to learn that as an education tidbit. All right, now one thing I just noted here was that it was interesting how on Friday the market low here stopped right before a break of a head and shoulders pattern. And I want to show you this right now. Let's take a look here. So if you go to your 60-minute chart, look at this pattern here. Shoulder, head, and shoulder. Now, if we had broken a little bit lower today, you would have cracked a head and shoulder neckline, which would have been a breakdown and a trigger for a move down to about 197 to 198 on the SPY. So think about that. From where we were at this low, which was around 205, 206, you would have actually had about an 8-point move down on the SPY. Pretty incredible move, actually, and it would have happened within a few days. But again, let me show you the neckline here. Here's the shoulder, the left shoulder, head, right shoulder. Take your neckline, which is connecting the low shoulder pivot here to right here. All right, look at that line. Pivot, pivot, and then it connects right here. So on Friday, you tested that neckline and you bounced up. Very important to recognize that, guys. Okay, so it did not break, which means the head and shoulders, again, did not trigger. The trigger, if it had broken to the downside here, it would have gone to 197 to 198. It did not. So these institutions are smart here. They know what's going on. They know the trigger points for the algorithms to start to sell. And if you break key levels, you're going to trigger other institutions to get panicky and sell into it. So they're very coordinated here. They're smart. They're stepping back at the right point to keep the market floating so they can continue to sell into the float ups. And mark my words, what you'll see later this week, and if the last week and the last week before that was any indication, you'll see the same type of thing. Early last week, Monday and Tuesday, we floated higher, and then Wednesday, Thursday, Friday, we sold off. Guess what? Monday's here. We're floating higher. Let's see what happens tomorrow and into Wednesday. Wednesday's the key day, it seems like. Monday, Tuesday, generally up. Wednesday, we want to see. What I'm also watching here is this trend line. Look at this. Pivot high, pivot high, pivot high. It likely tomorrow we will test this. I don't think we'll test it today because it's still a fair amount higher. But tomorrow we will test this downsloping trend line, and what we need to watch is, do we break that level? Do we break it to the upside? If you break it to the upside, you get a little more upside. Really not that much, maybe to this pivot high. But that would be something I'm watching very carefully. Ultimately, I do expect more downside, but you got to break the key trend line here. This is your trend line to watch. If you break this, you take out 204 on the spiders, which is a major level, and you go down to 197, 198. So that's a pretty big drop. That's another 70, 80 points on the S&P 500. If you break this trend line here, you'll drop 70 to 80 points to the downside on the S&P, 7 to 8, 7 points, 8 points on the spiders. Okay? All right, so really watch this very carefully. I hope you're learning a lot here because the market is an amazing entity. It's amazing to watch the trend lines work. I mean, it's not a coincidence that the market stopped right here on Friday's lows and you can connect these trend lines through. Learn your trend lines. This is one of the most powerful things that you will ever learn, how to dictate when the market could bounce. And we talked about this on Friday. We said, listen, it ultimately, if it doesn't break the neckline, it's going to bounce. It's just that simple. It's if it does, it breaks down. If it breaks the neckline, it goes down sharply. If it doesn't, it could float up. Well, what are we doing today? We're floating up on 45.5 million shares on the SPY. Gentle float higher. Never broke the neckline, so that's your result. Very, very simple. Okay? So again, guys, watch this. My projections remain the same here, which is neutral bias in general in this trend. Okay, we're watching this downsloping trend line here, and we're watching this slight upsloping one here. A break of this one, again, sends the market down to 197, 188 on the spiders. If you break to the upside here, you get a little more upside, and then you'll still come down. But ultimately, this is the big one for the bigger sell-off in the market. As long as it doesn't happen, don't expect a big sell-off. Expect choppy action. All right, guys, take care. Come join us at InTheMoneyStocks.com. This is an awesome market. Talk to you soon. Take care.